Hello everyone, finally something to talk about today. Excuse me for sounding a little funny. My throat is pretty messed up from this cold, but the market is also kind of messed up. The NASDAQ was down 1.47% today, and as you can see, volume was well above average. When you combine that with all the above average volume we've had lately, this could very easily turn out to be major churning following the end of 2013. What will prove that it was churning to me is if we resolve below the low set here on 1.6, which is 4103.75, and a close below the 50-day moving average. That will confirm to me that we have been churning all along. And as we begin to sell off, remember, we'll increase hedges. So tonight, I am going to add to my SRTY hedge, and it's going to be the remaining account capital available as of tonight. After I also go long LGIH, it's only going to be a 1% position. This stock has some pretty heavy sales and earnings growth, and earnings estimates for the remainder of this year is excellent. That, with a strong technical pattern in a market that's still technically under a buy signal, makes this a long position. However, due to the sell-off today and the fighting nature of the trend, which I don't like to do, it's only going to be 1%. That way I can take the rest of that capital and throw into SRTY. So that's that on the buying front. We actually do have some sells. TYL is a full sell as it's closing below the low day of the signal date. GNC, another heavy volume, closed below 50-day moving average. I'm now completely over it. Daktronics is closing below the low day of the signal date. Volume was not above average, but got pretty close. And Tesla is just rolling over. I don't need volume to just get out of it, because that rollover in 2014 combined already with the lower highs and the lower lows set throughout September to November is enough to want me just to get out of the full position. I don't need to wait to see a bounce or anything like that. We are done with Tesla. Partial sells. ARC closing below the 50-day moving average is a 25% sell. ALXN is closing below the 20-day moving average in heavy volume. That is a 25% sell. AMG is also closing below the 20-day moving average. It's also a 25% sell. FLT closing below the 50-day moving average on above average volume, 25% sell. ABBV, since it's erasing most of the gains with the close below the 50-day moving average, but still above the low day of the signal date, it's a 50% sell. You can make it 75%, 66%. I don't mind. And HHC, the heavy volume reversal so soon after a very strong long signal, once it makes me want to get out half of it. A further sell-off into the price range of the signal date with the market that continues to weaken tomorrow or through the upcoming days, and I want to be completely out of it. But however, I got pocket pivot point signals in SPXS, SDOW, SQQQ. I don't know if SRTY. Yeah, so I got them in everywhere. The confirmation of the volume is across the board, also in the ETFs, for instance, the DIA, SPY. So everything is confirmed. So we really have to be, careful out there right here. Like I said, I want to continue to add to hedges. Luckily, we have some pretty nice gains, so I'm not too worried. I'm not going to panic sell out of anything until it actually closes below the 20-day moving average or 50-day moving average. So remember, it's just one day. We'll see what happens. We're still under a buy mode. However, we decided to close below the 50-day moving average on the NASDAQ or the Russell 2000, even the Dow Jones Industrial Average or SPY. That's going to send us into a neutral mode, only because we do not. Yeah, we're pretty extended. I'm using that upper trend line on the Russell 2000 that I have. You can see that we failed along that upper band trend level once again.